here to say it, traditional real estate financing is dead. It's done. Rates are way too high right now to actually be able to cash flow or make any sort of money with the way that those rates are. So you need to start exploring some creative ways to finance deals to actually make money, because there's incredible deals to be had when rates are high and buyer demand is down. Sellers are wanting to get out of those properties, and the spoils will go to the one who actually comes up with some creative financing to get deals done. Let's dive into some ideas. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience running and growing a real estate team and investing in real estate. Before we dive into today's video, make sure you hit that like button, leave us a comment. I want to hear your questions, your concerns, what you think about things, so we can use that for future videos. And as always, be sure to hit that subscribe button so you don't miss out on our future videos. I am here to help you break out of that 9-to-5, gain financial freedom, and build wealth through real estate. Like I said, traditional financing is dead. The rates are way too high right now, 6, 7%, sometimes 8% for investors to actually make some cash flow deals happen. So we need to dive into some creative strategies. I wanna start getting your mind thinking right around some creative options that you may never have heard about, or maybe you've thought about, but you didn't think were possible. The more you know, the more educated you are on these, the better deals you're gonna be able to find, because there is incredible opportunity in a market where the rates are high, the demand is down. You just have to be the one to propose those creative options to a seller to actually make a deal happen. Let's dive in. Strategy number 1 for creative financing is the current loan on the property. We just came out of a period where interest rates were down in the 2-3% range for some people, and they are locked into those mortgages right now. Would you not love to be able to go in and take over that current mortgage with the 2 to 3% interest rate? Guess what? It's actually a possibility. It can be done. Common realtors don't actually think about this, so they don't often propose it, but it's an absolute solution for you, and you need to consider it. So for every deal you look at, you should be asking, what does their current loan look like, and is it assumable? Not all lenders are okay with this, but most are, and you just have to do some digging to actually make it happen. This would allow you to take over a 2 to 3% interest rate mortgage and take over those payments to actually have a cash flowing rental property. So the biggest con to this, the biggest downside, is you're going to have to come up with a down payment that makes up for the difference of today's current value to where their current mortgage is. You're not just gonna take over payments from somebody, you actually have to pay that difference so the seller can walk away with their money, but you get to assume it. So in some cases that can be multiple hundreds of thousands of dollars. If that's not you, it's okay. You walk away from the deal. You don't go after every single deal that happens in real estate, right? Even if you love the house, it's okay. It's a numbers game. Take the emotion out of it. If the seller comes back and says, yep, there's a $500,000 gap between my loan and what you would buy the home for, then walk away or propose a price that works for you. But in some cases it may be $100,000, and that may actually be what you've got available to make happen. You pay the seller that $100,000 and you can assume that mortgage, take over those payments, and be locked into a 2 to 3% interest rate. Option number 2 for creative financing is seller carryback financing. So what this is typically an owner owns a property free and clear. So again, not every property is gonna work for this strategy, but I wanna get your mindset thinking about opportunities this way. If an owner owns it free and clear, holds the title of that property, they can actually become the lender for you. We all come into these deals thinking the seller wants $500,000, they wanna walk away with that $500,000. That may not be the case. There might be underlying reasons why they're needing to get rid of the property, or maybe they're trying to sell it so they can go buy another asset and all they really need is $100,000. So in those cases, you can do seller financing. They become the bank for you. You give them a down payment, they finance the property for you for whatever number of years. I've seen 5 years with balloon payments, I've seen 10 years, traditional fixed rate 30-year mortgages, those are a little bit more uncommon, but you just have to find what works for the seller. They can become the bank for you. You give them the down payment, you come up with an interest rate that makes sense. You're typically gonna pay a little bit more than the traditional rate at today's mortgages, but you're going to qualify for that financing, be able to pick up that property, keep the seller happy, and you just need to find out why they're trying to sell it, because they might not need all of that money. So the seller can finance you And potentially, even if the rates are 5, 6, 7%, whatever they are today, you can actually negotiate a deal with them to bring down a lower interest rate, as long as you're giving them a little bit more cash up front. So it's a numbers game. You got to run those numbers. And again, if you can't come to a deal with them that makes sense, you walk away. The biggest mistake real estate investors make is having too much invested in it. They love the property, they feel like it's a great deal, and they end up compromising, and it turns out to a bad deal that you're stuck in. So if the numbers don't work, simply walk away and go on and find the next one. Creative strategy number 3 is similar to a loan assumption. This one is called subject to financing, or some say sub to financing. This one takes on a little bit more risk. That's why it's at the bottom of the list here, but it's an incredibly great way to take advantage of a lower interest rate and not have to lock into today's traditional rates. So this one is basically taking over a property subject to the current owner's loan. Basically, you're taking over their payments at their current interest rate. This is done without talking to the bank about it. There's no formal agreement between you and the bank. You're working with the seller to take over those payments. And then at the end, when that house is paid off, then it's officially transferred into your name. So again, a little bit more risk to it. Some lenders have some clauses written into their loans that they could actually call the entire debt due. So make sure that you do your due diligence and look into that. But sub to financing allows you to take over those payments, take possession of the property, live in it. Once it's paid off, it's fully transferred over to you. So creative way. Oftentimes you still are going to give the seller some cash and some sort of consideration to make up for that. But again, it's going to allow you to tap into that lower interest rate. If the lender says the loan's not assumable, then it allows you to work around that, take over those current payments, and use today's rates to actually cash flow an investment property. Those are 3 creative financing strategies that can help you get into a home, an investment property, taking a lower interest rate, getting to take advantage of potentially sellers right now that are worried about the market. You can take advantage of that, but you don't want to take advantage of today's interest rates. You want to take advantage of their interest rate or a lower interest rate. Those are some great options that can help you get into a deal. It is going to take a little bit of extra work, but if it saves you multiple hundreds of dollars a month, you carry that out over a 30-year loan, 15-year loan, whatever you're taking out, and it's tens of thousands of dollars worth of savings. So definitely worth the extra work. These are some terms that you might actually have to bring up to a realtor if they're not super savvy and investor friendly. You're going to need to bring these up because it's not common that they have to work outside of a traditional 30-year fixed mortgage. So make sure you bring that up to your real estate agent that's helping you out so that they can help explore some of those options, or seek out an investor-friendly realtor. If you enjoyed today's content, be sure to hit that like button. Leave a comment below about your thoughts or any questions you may have. Again, we can answer those with future videos and respond to you here in the comments. And also, be sure to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of that 9 to 5, create financial freedom, and gain wealth through real estate.